Ladies and gentlemen, good day and welcome to the IFB Industries Limited earnings conference call hosted by Nirmal Bang Equities Private Limited. As a reminder, all participant lines will be in the listen-only mode and there will be an opportunity for you to ask questions after the presentation concludes. Should you need assistance during the conference call, please signal an operator by pressing star then 0 on your touchtone phone. Please note that this conference is being recorded. I now hand the conference over to Mr. Prasheel Gandhi from Nirmal Bang Equities. Thank you and over to you, sir.
Thank you, Diksha. Nirmal Bang Equities welcomes you all to 4Q FY2022 results conference call of IFB Industries. Management today here is represented by Mr. Prabir Chatterjee, Director and CFO, Mr. Raj Shankar Ray, MD and CEO Home Appliances Division, Mr. Arup Das, Head of Marketing and Engineering Division, and Mr. Anand Reddy, CEO of Motor Division. I now hand over call to management for opening remarks, post which we can take questions from the participants. Thank you and over to you, sir.
Thank you. Good afternoon, everyone. Welcome you for IFB Industries call for the fourth quarter FY22. Hope everyone is fine and healthy. Joining me today are Mr. Raj Shankar Ray, MD and CEO of Home Appliance Division, Mr. Arup Das, Head of Marketing, Engineering Division, and Mr. Anand Reddy, CEO of Motor Division. Now I'll talk on the results. During the quarter, we witnessed a low growth of 10% and YTD growth for the year was 22%. The growth during the year was affected mainly because of the low sales during April and May because of pandemic, and thereafter growth was moderate. During the quarter, we had a EBITDA of 6.77 crore and very low YTD EBITDA of 68.19 crore on YTD basis as a result of low sales as mentioned, and together with high commodity price throughout the year, which included high freight costs, higher semiconductor prices, and as stated earlier, moderate performance in key branches. So overall, the EBITDA was low and is not acceptable. The continuous increase in material costs could not be recovered to price increase from customers. With this, I will request you to start the question answer session.
So you may go ahead. This is the operator here. Am I audible, sir?
Yes, please.
Please go ahead. I'll start the Q&A. Just give me a moment, sir. Thank you very much. We will now begin the question and answer session. Anyone who wishes to ask a question may press star and 1 on the touchtone telephone. If you wish to remove yourself from the question queue, you may press star and 2. Participants are requested to use handsets while asking a question. Ladies and gentlemen, we'll wait for a moment while the question queue assembles. We take the first question from the line of Bhargav from Kotak Mutual Fund. Please go ahead.
Yeah, good evening, sir, and thank you for the opportunity. Sir, my first question is that if you look at your gross margins on a Q-on-Q basis also, there has been a decline. So is it possible to sort of elaborate a bit on this in terms of why was there also Q1Q decline in gross margins?
So, Mr. Chatterjee, would you like me to answer that?
Yeah, you answered.
By Q1Q margin, you mean Q3 versus Q4, right?
Yes, yes.
Okay. There were two things which have impacted that. One is that the percentage sale of air conditioners is higher in Q4 compared to Q3. And as on date, the air conditioners are running at a lower gross margin compared to the washer segment. So the rise in the percentage contribution from ACs reduces the cost contribution. And the second is that there were further material cost increases in Q4, which were not recovered within Q4, to be recovered in subsequent quarters. So the combined effect of the two has what has caused the drop.
And within ACs, is it possible to break it up between B2C and B2B, which is the outsourcing piece?
So you will see in the investor report this time that we have actually shared the losses that we have made on the air conditioner as a segment. We wouldn't want to give a breakup of the OEM versus the brand split between the two. The gross margins on own sales are definitely higher, but overall for both, the gross margins are much below what they need to be, which is something that we need to finish work on between this quarter and the next quarter.
And in terms of utilization, what would be the utilization of your AC factory as of now?
In Q4, actually the demand on the plant was more than what the capacity is, and we lost sales in the month of April and May because we couldn't supply. If you look at the current situation, we are fully booked. If you look at for example, if you look at specifically the last 2 months, where our total sale has been around 70,000, and that's about 35,000 a month, our capacity is about 40,000. So we are nearly fully booked.
Sorry, last 2 months, which months are you referring to?
We are talking about April, May.
Okay, April, May, you were already booked, is what you are highlighting.
Yes.
Okay. And this is a mix of both OEM as well as own sales.
Yes, that's right.
Okay. And in terms of guidance you are highlighting, you wanted to clock a run rate of about 150,000 to 200,000 of OEM sales. Are we on track to achieve that guidance?
Yes, we are on track.
Okay.
So,
is it possible to... Yeah, go on.
No, please, you are asking something.
No, so you told us that the gross margins in the OEM sales would be lower as compared to the branded sales, but is it possible to highlight, is it a very big difference or sort of a minor difference?
No, it's not a minor difference. It's a significant difference. But what happens is that below the gross margin on the brand sales, you have expenses sitting in the field.
Yes.
Whereas for the OEM sales, once it leaves the gate, there are no further additional costs.
Okay.
So as far as the current situation at the bottom, at let's say PBDIT level is concerned, both would be similar, where we have to work on both. At gross margin level, of course, there's a difference.
But as the business scales up, is it fair to say that we will be in high single digits EBITDA margin for the entire business as a whole, the AC business?
Yes, what the internal work is on, because this segment has actually had quite a negative impact on our profitability over the last 2-3 years. So this is the big agenda to fix for this fiscal year.
Okay. And what would be the FY22 sales from AC, or if you can give us a breakup?
We are currently looking at about
FY22 AC sale was 152,684 in numbers.
Okay. Yeah, sorry, you were saying something else as well?
No, I thought you were asking for the forecast sales for this year, but Mr. Chatterjee has answered your question.
Okay. Understood. Okay, I'll come back in the queue. Thank you very much for your answers.
Thank you. Participants who wish to ask a question may press star and one at this time. We take the next question from the line of Amish Thakkar from SD India. Please go ahead.
Hi, sir. Just wanted to get more insights into your AC business. So you said FY22 volumes were 152,000. Can you give us the value? And the second question is, your presentation mentions that overall appliances division reported 43 crores of EBITDA last year versus 18 crores EBITDA loss this year. And only 37 crores of that was because of raw materials. So what is the remaining delta decline in EBITDA coming from?
The value for AC was 522 crores for FY22.
And this is before discount, right?
No, this is the gross.
And what will be net revenue?
Net revenue, which I can tell you separately.
Okay.
Thank you.
Mr. Chatterjee, the question was also about the swing in the profitability in Q4, so you could answer that as well.
Can you repeat the question, please?
Yeah. So Q4 FY21, you had a EBITDA profit of 43 crores versus 18 crore loss this year. So the total swing in EBITDA was about 60 crores, out of which only 37 crores came from your raw materials. So where is the remaining 20-25 crores of EBITDA swing in EBITDA coming from?
Because there were we have spent more on sales and sales promotion this year, especially on AC, and balance is on that because of the mix, team cost is slightly higher, and the employee cost increase because of the increase in number as well as increment effect.
Okay. And what will be the difference between gross margins in AC division versus rest of home appliances division?
The AC margins are significantly lower as of now. But a lot of things have been done now to, like we have already given in our listing, because we are reducing.
Mr. Chatterjee, we can't hear you.
You can't hear me now?
We can hear you, sir, now.
Yeah, you will have to repeat. The voice had gone blank.
So what I said is that the last year import content was quite high. So we have taken significant steps to reduce the import content, which we have already given in our presentation. So going forward, things will improve substantially. Am I audible now?
Yes, sir, we can hear you now. Mr. Thakkar?
Yeah, that's enough.
Okay, thank you. We take the next question from the line of Rashil Gandhi from Nirmal Bang Equities. Go ahead, sir.
Hello, am I audible?
Yes, go ahead.
Yes. So, sir, could you give a highlight of the price growth you have taken across various segments in FY22?
If you see from January 21 to March 22, the total increase in price has been around 12 to 13%. This is the average, so in some models it will be more, some less.
Okay, and for FY22?
For FY22, there is
from April to March?
another 2 to 3%.
And so have we taken price hike in Q1?
We have taken a
For
price
current-
hike in Q1. We have taken a price hike in Q1 in the month of May. We have done that.
Could you quantify that? Is it possible to quantify?
For this fiscal, about 2 to 3%.
Okay. And my second question was, could you highlight your CapEx plan for FY23?
CapEx, we are in the for engineering division CapEx, other than routine CapEx, there is nothing. But for appliance division, we are working on it. For motor, we have a plan of around 34 crores because of the new BLDC line.
Okay. We expect to go to this BLDC line to go live by September 23. So could you highlight what would be the incremental cost of BLDC motor versus a normal motor?
Anand, I would request you to answer this question, please.
Yeah. See, actually the regular motor, the one which we are using today, is much more expensive than the BLDC solution that we are offering. BLDC motor will be cheaper in comparison with the universal motor, but that savings, whatever we get, will get mitigated by increasing cost of the controller. So net as a package, motor and controller, the cost may increase by 1,000 to 1,500 rupees.
Okay. And one more question. We recently amalgamated with Trishan Metals Private Limited. So could you throw some light on that? What is the company? What are your plans for the company going ahead?
Aurob, please answer. Yeah, actually this is a downstream project. It is a rolling mill which rolls sheets which are used for captive consumption as well as for external sale. Because the fine blanking or the stamping uses the CR coils which will get produced from this plant and used for manufacturing. Now the thing is that as far as the future projection is concerned, the present capacity of the plant is 1,400 metric ton per month, which with the additional improvements as well as some capex in it, will go up to 2,500 metric ton per month. It would be advantageous for all the units which are into engineering business to get material just in time of the right quality, because material scarcity here and there creates a huge issues for the OEM supplies. So this being a downstream project helps all the plants in meeting customer requirements in full.
Okay. So could you quantify some of the cost savings that we can, that is likely to come through from this amalgamation? I'm assuming that downstream would lead to a lot of cost savings. Am I correct on that front?
Mr. Chatterjee, you want me to
cost
saving mainly will come from the area of the reduction in waste.
Okay.
While the operational waste reduction will be there, number one. And getting material in supply also will reduce the cost in the other units.
Okay. So could you quantify what is, if I look 2 or 3 years down the line, what is the cost saving?
Now we are working on it. This should not be, as of now, will not be able to give any guidance on that.
Okay, thank you. And a question pertaining to dishwasher. I see our dishwasher sales have come down drastically compared to the last year's quarter. So could you throw a light, or is it the normalcy that we should expect going further?
So the overall market demand has come down. That is a correct point. However, we still believe that the market can be grown by expanding displays, focusing on marketing of the dishwasher, and that is what we are working on internally. But the market demand has significantly gone down. There was a sort of an unnatural demand during the lockdown period. That has gone.
Okay. Okay. So going forward, it is safe to assume we would be doing about 150K revenue, 150 million revenue.
I'll have to cross-check on the revenue side, but in terms of numbers of dishwashers, at the current run rate, we are looking at about 40,000, 45,000 dishwashers a year. We are working to increase this to about 70,000-75,000 dishwashers a year. So if you take that figure of 30,000, 70,000, and at 30,000 each, that's about 225 crores of revenue.
Okay. And lastly, on the e-commerce segment, so could you quantify how much are sales for Q4 as well as FY2022 was through e-commerce channels?
E-commerce quarter 4 was only 9% of total sales, and
Okay.
during the whole year it was 16% of total sales.
Okay. So going forward, do you think our presence, say, e-commerce sales are likely to go up to 20-25%?
No, we would expect the offline and online sales both to rise. So on an average, 15-16% would be the e-commerce sales. That is more or less a stable level. In some months, in some periods, it rises to 20% and beyond. But overall, on let's say a YTD basis, 15-16% is what it would be.
Okay. Thank you. I'll get back in the queue.
Thank you. Anyone who wishes to ask a question may press star and one at this time. Participants who wish to ask a question may press star and one. We take the next question from the line of Chirag M from Centrum Broking. Please go ahead.
Thank you. We just wanted your comment on the competitive intensity in the industry currently. We have seen a trend, for both AC and washing machine, where despite such a high cost inflation, a lot of players have not taken requisite price hike, and the competitive intensity has really increased. So just wanted your comments on that, and in that light, how do we see FY23's operating margin translating to?
Yes, so this is a good question, and what you are saying is right. There are two of the larger players who have actually held back on price increases right through the previous fiscal year. And from a pricing point of view, it has caused a disturbance in the market. As far as we are concerned, you cannot respond to what they are doing, which is basically losing profit for market share kind of a strategy. So we have been focused on completing the material cost reduction work, which is our biggest agenda. And the second is to continue to focus to broad-base our sales from all channels, including the smaller retail networks which are led through distribution, looking at how we can increase model mix for favorable gross margins. So those are the actions we've been working on. The results have not shown in the previous fiscal year, but we are trying to ensure that we are able to deliver it in this fiscal year. You cannot specifically respond to the kind of things that have been happening in the market in the last fiscal year from the two larger players. Does that answer your question, please?
Yes, sir. It answers that. Sir, is it possible to give elements of an indicative margin profile that our internal measures can result in, assuming that its level of competitive intensity remains the same throughout the year?
What Mr. Chatterjee and I have said for quite some time is that we think that with what we have on our plate, a double-digit margin profile is deliverable. But we haven't delivered it, and that is what we have to work on. So we still feel that even with what is happening in the market today, with the actions that we have on our plate, a double-digit margin profile can be delivered or has to be delivered by us.
Okay. And so specifically come to washing machine now, are we seeing any trend of premiumization in the sense that is front-load washing machine gaining in terms of outperforming growth compared to a semi-automatic washing machine, or are all three categories still growing at more or less equal pace?
For many years now, the fully automatics have been growing faster than the semi-automatic. Top loads specifically have been growing quite rapidly, and even the front loads have been growing. Now, but the semi-automatic market is not going away. In sheer volume terms, it is still quite large, and it is growing. It is not that it is stagnant or degrowing. Your question of premiumization is an interesting one, because even within a category there is a lot of premiumization. So if we look at just front loads and we look at the last 2 financial years, or even specifically the last 2-3 quarters, the percentage of the higher end capacities, which is 8 kgs, 9 kgs, have been growing. They are growing more in upcountry areas, but overall they are growing. So premiumization is happening within a category, that is a segment like front load or top load, and the fully automatics are growing faster than the semi-automatics, so that is also happening.
Okay. The realization for us, is it rising in line with the price hikes that we are taking, or because of competitive intensity, even in front load washing machines, the realization is not rising as much as we would have expected to?
No, the realization is rising in line with the price hike. So we have not, increased the discounting in the market. But what has happened is that we've not been able to pass through the material cost increase as quickly as it should have been done, and not still to the full extent. So even today, there is a 3 to 4% lag in terms of what we need to pass through to the market. So the realizations have improved in line with the price increase.
Okay. Thanks, sir. That's it from me.
Thank you. Anyone who wishes to ask a question may press star and 1 at this time. We take the next question from the line of Prashil Gandhi from Nirmal Bang Equities. Please go ahead.
Sir, a couple of questions on my side. First, on the motor division, we have said that we are exploring opportunities in the EV space. So could you throw some light on that? What are we targeting in that part of area?
Actually, on the EV side, some motors, we are looking at opportunities in 2-wheelers and 3-wheelers to start with, as well as we are looking at opportunities in commercial vehicles, that is 1-tonner, 2-tonner kind of vehicles, motor and controllers.
Okay, so do we have a product that is ready, or we are also into the R&D of the...
We are in the R&D stage. We do not have a ready product yet.
Okay, so something to contribute to a new line would be somewhere 24 or 25 during FY2024-25. Am I correct?
Right.
Yeah. And second question is, we have turned EBITDA positive in our motor segment after quite a long time. So do we expect this trend to continue going ahead, or?
Yes, we expect the trend to continue. With the commodity prices cooling down, we hope to have a positive EBITDA.
Okay. Thank you, sir. I'll get back in with you, and all the best.
Thank you.
Thank you.
We take the next question from the line of Aviral Jain from SG India. Please go ahead.
Thank you, sir. Sir, could you please help us? I have 2 questions. One is specifically pertaining to Q4 FY22 versus Q4 FY21. There is obviously a gross margin compression, but from an absolute perspective, what were the key deviations on absolute costs incurred, which led to such a large deviation in profitability? That is the first question. And also, for the first time, there was some detailed mention of the P&L for the AC business. So could you also break up the appliances business, the P&L between AC and non-AC? How are you looking at it? What are the dissimilarities in terms of gross margin, in terms of promotion expenses, and some of the other expenses?
Sir.
Mr. Chatterjee, you can answer this.
Like I have already said, the difference in the fourth quarter this year versus last year mainly is the difference because of the commodity price. And we could not pass on the entire price increase which is required to be passed on because the material cost increase was happening on a continuous basis. Number two, for AC specific, we did some sales promotion expenses to increase AC sales because the AC components both last 2 years, 2021 and 21-22 April, May, we lost because of the COVID. These are the two main areas, and besides that, volume was also not up to our expectation. And the second part, what we said, you asked about that the margin and contribution AC versus others. Actually, we do not give any guidance or details on the product margin. But AC, we wanted to give specifically with the purpose that that business did not do well, mainly because of the material and the volume related issue. And we lost the season during the period April-May, which is the main season for AC. These are the main reasons.
And sir, there is no internal product acceptance issue per se. It was mainly because of shortage of parts or material for which you were not able to meet your whatever internal aspirations on the AC side. Is that fair to say?
Yes, that's right. In fact, on the product acceptance side, the product has done quite well in the market, and the quality levels, performance levels are all in line with what we had targeted.
And so related question was, again, there was an update on the AC target versus actual, and May there is, the actual is going to be significantly short of the schedule. Any reason for that? Is it because the season is gone, or again you have supply issues?
We have supply issues on areas like the compressors, etc. And there have been a lot of shipping related problems with China, for which a lot of the key inputs didn't come on time. So those are the problems that we've been struggling with.
Okay. But as in, just on the AC, so our last highest sales in a year, in a fiscal year book has been around 320 crores. But if all the, I've seen we did 174 odd crores of sales in the first quarter in the last Q4 itself. So would it be fair to say that this will achieve a very significant scale once the supply chain issues get sorted out?
Yes.
The number look like 600-700 crores plus in the near term.
Yes. So you see, in air conditioners, there were 2 points. One is to get the range right. Because when we introduced the range in January 20, after that about a year and a half, the price positioning, etc., that we had taken was more on the premium side, and we had issues in terms of placements in the market. The profitability, of course, was a problem in the first year itself. So we had the two agendas. One was to get the range right, and that was completed in January 22 with the introduction of a new series, which has actually significantly contributed to the rise in volumes, because by March or so it was fully available in the market, and it was received quite well. So that part of the job is over in terms of the range that we have now. The profitability is the area that we suffered quite significantly in the last year, and this year we have to fix the profitability. So the combination of the volumes that we'll get this year and the profitability that we need Yes, this segment will have a significant impact on our results.
And so what range, as in, have you introduced a lower price, affordable range, or it just took more effort to get the placement for the initial range that you launched?
We actually segmented the market into, key accounts, small dealers, supplied through distribution networks, and the market was segmented into 5 segments, and we actually had a range for each of the 5 segments. So it wasn't a question of lowering the price, but it was getting the specification right for the segment in which the AC was going. So we've corrected all of that, basically.
And if I may say that the endeavor would be to have the premium range also pushed into accounts where the indexation is low. Now, obviously, you are first supplying what the channel demands, basis their comfort with with whatever price value equation they want to offer to their end customers. But
yes, that's right. That's right. You're absolutely right. So if you see, for example, on the 2-ton air conditioner, which is premium, and we were very short of demand, we have not been able to supply the market properly in the last 3-4 months. And if we do supply 2-ton ACs to the requirement that is there, then automatically the profitability profile improves. So it's not just about supplying the more expensive or better spec ranges to some accounts. It is also about supplying the higher capacities in full. Both the things need to be addressed by us.
And does that require tweaking of the specs tweaking? Does that is there a significant margin difference for the realizations that the company is seeking, or there is material input cost change as well because you would use more? I do not know. Maybe the compressor remains the same. I frankly do not know what
it is actually, it doesn't change the profitability profile, but the ranges, specifications are different. So, you might have something at a particular wattage and another range at a lesser wattage with a different compressor, where the application will be different. So it is not about reducing the margin on the particular range. It is about the specification, which is a material input change as well.
Got it. Yeah. Okay. Thank you so much, sir. And automobile business now, it's I would assume that it's coming back. Obviously, it's two-wheeler business is still suffering. Major OEMs are reporting 15, 20%, 30% declines, but four-wheeler at least is reporting same level of sales as 2019, I guess.
Arup. Hello.
Yes, sir.
Arup. Yeah, can you hear me?
Yes, we can hear you.
Yeah. So you are absolutely right. It is showing early signs of improvement as far as four-wheeler is concerned. Chip shortage is a plaguing issue which is continuing now also. Demand is there in the market. Waiting period has increased considerably for the four-wheelers. Once the chip supply chain issue is resolved, I think four-wheeler numbers will drastically improve. As far as two-wheelers are concerned, yes, you are also correct that last quarter or more, I mean, the demands on the two-wheeler was very, very poor, but showing signs of improvement going forward. So overall scenario, I would say, big positive going forward in coming quarters.
Okay. So one last question. Did the freight rate also hit the cost side out of proportion in Q4 and even now? That's what we hear, because there is still 40-45% BOM is imported, at least on the AC side, and there could be a high BOM for front loaders as well, which is imported.
Yeah, so the freight has increased, but that is not an explanation for the reduced margin. Freight, basic availability of freight exit China has affected the supply chain. Freight rates have been high in Q4, but they were also high in Q3. So per se, that is not an explanation for a profitability problem. But supplies, yes.
But
Does that
it
answer your question?
impacted marginally. But I think the third quarter and fourth quarter it was quite high, but it is now gradually coming down. But like Mr. A was saying, but the issue is the irregularity of the supply.
Okay. Sorry. Thank you so much, sir.
Thank you.
And yeah.
We take the next question from the line of Bhargav from Kotak Mutual Fund. Please go ahead.
Yeah, thank you for the opportunity once again. So on the OEM side, is it possible to share how many clients would we be servicing to, and what are we doing to ensure that this business is sticky in nature and we don't lose out any client?
We are currently supplying to 3 buyers. I wouldn't want to, mention them here, but we can, separately give them to you. And this point about the sticky thing is absolutely right. So, in terms of servicing them at the right time, ensuring that the costs are always mutually agreed, this is an area that we have to work on. Currently, they are all regular buyers, but that doesn't mean that they will remain regular buyers. So we have to put in that effort on the OEM side to keep the utilizations up. And we are working on that.
So is there any order book where we have a visibility of, say, maybe next 6 months or 8 months or something like that, or no?
Yes. We have a 3-month order book, which is discussed with them and which we are working with. So let's say if we are sitting in the month of May, then post the new energy norms arriving on July, for July, August, September, we have an order book.
Okay, understood. So, given that we have not been able to service the demand as you've shared in your presentation, there is no risk of any of these customers leaving on the back of that, right?
No, there is no risk per se because of this. But of course, there is dissatisfaction because of supply.
Sure.
We will have to ensure that we address that concern by explaining what we are doing to, to ensure that this doesn't repeat.
Okay. So given that shortages on the compressor side was one of the key reasons, so are we doing anything to mitigate our import dependence? I mean, is it possible to elaborate on a bit?
Yes. So you want us to elaborate for the air conditioner specifically or overall?
Yeah.
So on the air conditioner, the electronics has been completely localized from February this year. So that job was completed. As far as there are some critical areas like a part which is called a cross-flow fan. That a supplier is investing in, and that will be localized over the next 4 to 5 months before the next season comes. As far as the compressor is concerned, which is coming exits China, there is a supplier in Gujarat that we are working with, and there is also a supplier who is investing in a plant in Pune. And both the suppliers are good suppliers. So by next year, the compressor will also be significantly localized.
Okay.
That leaves the aluminum sheets that are used in making the condensers. These are currently 100% imported into India. But under the PLI scheme, Hindalco has begun a project along with the industry to localize this into India, and I think over the next 2-3 years, this work will also be completed.
Okay.
So for IFB and also for the industry, a great deal of import substitution will take place under the PLI scheme, which is the government intention as well, and this should happen over the next 2-3 years.
And fair to say that as the levelization increases, the cost will also sort of come off a bit?
The forex-related risk will go.
Okay.
As far as cost is concerned, for the suppliers to acquire scale will take a little bit of time. So I would put it at a, let's say, 4-5 year kind of a horizon. As far as IFB is concerned, our biggest lever was on the electronics, and with the localization, yes, the cost has dropped, the impact of which we will see in quarter one.
Okay. Okay. And now that the utilization in AC has improved, fair to say that FY23 we are looking at this business to turn profitable?
Yes.
Okay. Understood. Okay, sir. Thank you very much for your answers and all the best.
Thank you so much. Anyone who wishes to ask a question may press star and 1 at this time. Participants who wish to ask a question may press star and 1. As there are no further questions, I would now like to hand the conference over to Mr. Prasheel Gandhi for closing comments. Please go ahead.
Thank you, Diksha. We would like to thank the members. We would like to thank the management of IFB Industries for giving us the opportunity to host this call. We'd also like to thank all investors and analysts for joining the call. Any closing remarks from members of management you want to give to your investors?
Thank you all. Thank you all for participating.